Either US or Germany or Japan that we'll talk about today are finally reaching its highs. I mean, in a kind of a quarter horizontal spectra. But is there a confirmation for a new bull market to come over? The one thing is certain: the closer we get to the deadline of this U.S. rise of a ceiling, U.S. debt rise approval, the more nervous market participants become. So they may not maybe seek for safer havens as by now, but they will probably set this volatility of latest week aside. So there is a kind of a more quiet sessions back in what we've seen in 1 week ago, but there are some marks that may prompt us to think that this bull market is not over. In the interim, Bitcoin and Bitcoin's volatility may eventually become the hammer for the nails of the coffin that have a very sensitive minds and have probably outsized bets. I'm talking about the reversal of a possible head and shoulders pattern that we'll talk about in a second. So I think that right now it's very, very important to watch what's in the cards. What's this volatility, this very low liquidity and volatility right now may be telling us. That's why I'm very glad you decided to pop in, and let's start our new broadcast. Alright, economy view is the first one block to scroll through, and Nikkei has reached its highs lately, and I didn't really make much of a projections of where it may stop. So right now I'm just trying to work it out with you, and as you can find that Japanese stocks has been reaching this year's highs, and could this be the moment when Japan enters a remarkable bull market, the one that happens just one single decade, or even in terms of stronger scale, every generation. So Japanese index eventually shook out of this jolt of past decades, and right now might be in the midterm of a something bigger. So Nippon, the word for Japan, literally, is the country that recently been really striving with many problems, with lower GDP growth, with high level of debt, also weak consumer spending and stagnant corporate earnings. But right now it may get eventually to change. So we were doing prolongedly with higher level of deflation out there that was causing a low gross domestic product gauges, but stimulation of the economy by global inflation, paradoxically, given Japan a beneficial boost. So Japanese economy might be right now stimulated by lower level of interest rates being served by Central Bank of Japan, and that's in relation to other countries of the West, where those interest rates are merely above 3 and 5% relatively. So talking about all of these factors, we've seen eventually boosted growth for economy as well as for Japanese stocks. And if we just jump over to the charts. Let's find out what may lead US stocks next. So on Monday we had correction, so we are right now rebounding out of this its highs of 30.5 thousand, and right now it's the sign of a possible time where those bulls may step in after the sell off. Right now, however, the index is still very highly extended, and I would rather expect to wait until the bulls will turn up eventually and will possibly build another base before another rocket upwards. For now, this looks like a real rejection that will spark another wave downward with a higher likelihood. So another support will be this 29.97, the level we haven't stopped at during this rally, and the one of the steps that might be we might be heading off next upon June. So it was Japanese index right now. Let's find out who is outperforming in the post-pandemic labor productivity race, and you can right here find that Japan equated the United States. So Japan is known, as we do know, for its strong manufacturing sector, which includes the production of automobiles, electronics, machinery, and so on. And this manufacturing with this results of economy looking much more strong that we have previously suspected, is pushing these valuations of a index much higher. So Nikkei was a hated index by now, as it was consolidating that long that almost everyone lost its patience. But as we do know, on a stock exchange, the patience is the highest and the greatest virtue that you are about to better nurture to get better profits. So what about US in relation to this? Yes, US has also gained lately, but is far from reaching that performance that European stocks or Japanese stocks have achieved, and that's mainly due to that inflation is getting more and more noticeable amid low and middle class. That's what's one of the reasons. Most important financial problems facing American families are right now, as you can find it, high cost of living and inflation is giving the result of 35% of surveyed bringing. There is a serious problem that also looking in a anxious way, also taking in consideration a wage rates that are already dropped lately. So this inflation may not get stopped within this second half of the year, and with those wages getting also stopped or even sliding a bit, it may eventually get us a real trouble for the economy. Right now, let's get to market outlook, and let's find out what's about SPY. So SPY right now is testing from the level of 420, the level of 416, and that's where also the bulls may step in. For now, however, we have opened on Tuesday with a gap, so it means that right now bulls are really exhausted. It's very likely we'll get gap up this latest window, and right after that will be very important to watch what will be the next thing to come. But right now we have built a, like, I would say, a congestion zone that is sitting around 1417 and 1420. That will be kind of difficult to take over. So for now, the outlook is possible lower after hanging around somewhere around this 418 area. Right now we are getting back once again to our presentation, and we can find that this year's profits and better performance than expected has been guided by profits revival. So year to date, we could find that market's expectation for rate cuts were the one of the biggest driver, as well as profit margins of those companies as well, that has formed a W bottom, W double bottom. So right now, I wouldn't bet that the recession might be right behind the corner after building such of a important and strong structure that may push us higher on the months to come, and the EI narration should be one of the biggest ignition powers around. So what about the players that haven't really caught up yet? So largest manager underweight's relative return is right now showing that the primarily driven sell-off has been led by contraction in multiples. So many of investors have acknowledged that stocks were overpriced and they literally jumped out of the market. However, when it started to pivot very abruptly, they didn't really manage to make it on time, and that's why many of those players are still aside of the market. That's why after having this very nice rally on Nasdaq and SPY on some extent, they're supposed to be seen a much bigger interest in those indexes during next months. I would say I wouldn't really buy at those valuations if you haven't bought already in terms of Nasdaq, but it definitely may spark another wave of interest that may put the index in growth mode in the months to come. So EPS for now expected to grow 16.7% over the next 12 months versus 4.6% for the rest of the S&P 500, and it means that right now the US 100 is much more predestined to grow than other major indexes that consist more of a value stocks than the growth one. So the AI narration should be one of the predominant power. Rooted optimism. Right now we can find that a strong first 100 trading days bode well for US stocks, and that may also that may rhyme this time as well, and we may have eventually maybe a correction phase during this third quarter, but the fourth quarter is usually the strongest for the markets, and that's what I expect to happen supposedly this time. What about the crypto outlook? I have a very ominous finding for you. So Ledger CEO Pascal Gauthier confirmed that the government could access clients' private keys through the Ledger Recover feature in case of a subpoena. So if you don't know, there is an explanation what the private key is. Private keys provide a feature of signing ongoing transactions, and without them, you literally cannot do nothing. So crypto was the one of the sector that supposed to be untouched by regulators to the extent that you may have a free will of where and when you wanted to spend those digital tokens. But with this backdoor, I would say that crypto won't be that crucial anymore. So you can also, as obvious, use any other wallet, whether it's a desktop wallet or the cold wallet, but I wouldn't really recommend using right now those digital wallets that have a backdoor really inscribed. So right now you'll have to very diligently study every single tool that you keep in and storing your crypto on. That's why it's much more difficult for now to become really independent from the governors and authorities, and that's why you need to you need to really do your research in terms of where do you storing your money. Ledger NS right now is the one of the losers that is right having such things really inscribed. But I wanted to know also what's the other stances of other founders of whether it was Razor or other these physical wallets. Indeed, that's why I'm very interested in what the other point of views are about to tell about the topic. If you just wondering what we may bring over, just subscribe to the channel of Blockrevision. I will get you updated on the thing as soon as possible. So market mover section right now, we are jumping to economic calendar. Or maybe at first let's jump back to jump back to this presentation things. So Swiss were recently under strains. So Switzerland is considered an important country in terms of global industrial production. Despite its relatively small size, it has a highly developed and diverse industrial sector that contributes significantly to the global economy. And right here you can find that those elements as machinery, watches, and precision instruments have noted a hit of a market turmoil that right now pushing us lower. We still have the next data to reappear if we just jump to economic calendar, Switzerland. Where is Swiss? Supposed to be. So I probably found it in another market calendar, but I was about to find industrial. What was it? Monday? Oh, this week. Just look at it. Oh yeah. So on Monday, that was a gauge that just turned up, and it really surprised us to some extent. That's why I would stick to watching this one thing in order to find out whether Swiss is eventually recovering after this March turmoil with banks. So it may also weigh on the currency. Indeed. What about next? There is a interest rate verdict on New Zealand's interest rate decision from Reserve Bank of New Zealand. But as we do know, Australia already hiked by 25 basis points to 3.85%, and it means there is so of a big tie between the economy of New Zealand and Australia that I don't really expect the fireworks. And as we do know, the close economic ties may become the one that may once again put New Zealand's currency in tandem in terms of changing interest rates to Australian one. So right now, if you just have a look at odd to NZD, you may find out that it's right in the interim of a possible breakout if the NZD decision, the RBNZ decision will be as mentioned right here. What about the earnings right now? We have right here the Palo Alto that I will talk about in a second, and we are right after the Zoom's earnings as well. In terms of tomorrow, there is also Analog Devices and Xbank to watch. In terms of Zoom Video, it's seen revenue of between 1.11 and about in line with a consensus forecast of 1.11 billion. So Zoom right after earnings report has surged but as we don't know, the environment right now is not favoring Zoom Video after that many companies are really having this time of calling their employers to work at offices. So after this post-pandemic reality, we are right now having a trouble with getting a real boost of profitability for such companies that are serving the platforms to make the meetings online. We need another catalyst, I guess. Palo Alto projections right now is pushing us a bit lower than we were before, so it might be much easier for a surprise than it was back then. Right now, as we don't know, Palo Alto may tell us a bit more about the state of cybersecurity in the US and also about the continent of Europe, as it also serves some operations right there. For now, however, as we do know, there is a boom on everything connected to technology. So this digital transformation initiative may also prompt Palo Alto to rise higher. And in the end, right now we are jumping to Trade Idea, and I have a Bitcoin for you. So I will just tell you what I meant by possible negation of a head and shoulders pattern. So right here we are jumping to BTC USDT, and you can find that we have right now consolidating right underneath the head and shoulders, but this consolidation is taking much longer than a week, and after that formation being formed, such long consolidation underneath might be right remarkable in terms of possible reversal of a initial tendency. Also, this really weak, that is very long one in its height, may also serve a projection that we might be more predestined to hike right now rather than slide. So on a 4-hour chart, we also finding a type of a consolidation pattern that may have a accumulation type of mode, and every single breakout about 27.73 might be the one to push the valuation of the digital token higher. So for me, negation of a head and shoulders pattern is the one of the strongest buy signals among technical analysis. That's why if we just manage above 27.47 on Bitcoin, it would mean that we might be reaching new highs of a possible 32,000 new highs of this year. So if we just put a long position Spectra, it would push us to play out such of a trajectory of a trade with 6.26 at a profit ratio side. So risk reward profile is very lucrative. I would really wait for BTC USDT to close above that channel, and if it did, it will be a very nice catalyst for growth for BTC USDT. Right now, also Ethereum to USDT is the one that not showing much of a weakness, and that might be also one of the indication that we may negate that very ominous chart pattern of head and shoulders have been formed. So that's it in today's episode. Let me know in the comments or chat what you think about it, about the trade, and about the content I've just approached. I'm very glad you decided to stick around, and we will see each other tomorrow.